I think over times it's interesting that India has become more and more prominent in the global ecosystem and the financial system, right? But conversely, particularly in the last few years, uh, it's not been the foreign investors that's been driving the Indian markets, right? Both on the debt side and the equity side. I recall about 5-6 years ago, foreign investors owned about 5% of the Indian bond market. Sovereign bond market, their holding is now less than 1%.
Right.
Right. So we have seen similar trends even in the equity market. Both 2021 and 22, foreign investors were net sellers in India.
Yep.
This year we have seen foreign investors again coming back, but we saw outflows in the Jan to March quarter. We saw inflows for 4 months. Again, we saw a month of outflows. But in aggregate, we have seen about $15 billion of inflows this year. Right. Given India's global contribution to growth and overall GDP, I think we should expect $20-25 billion of inflows to be kind of steady state for India. However, what has dramatically changed in the last 5 years is global interest rates or cost of capital has changed. And that's why while India's contribution to global GDP growth has gone up, but share of global flows has actually come down. The biggest supplier of funds actually has been the domestic market. Domestic retail investor, you would have seen household savings in equities have gone up. It's gone up. Its share has gone up to almost 5%. We at our AMC continue to see consistent flows. I think what I also find is that domestic investors have moved from investing into equity markets to allocating to equity markets. Right. Because for the last 2 years, the net amount of inflows you have seen in the Indian equity mutual fund, more than 80% has come from the SIPs. Right. You would have seen the just announced number for even the month of August. There was almost $1.9 billion of SIPs that came in. And I think when people are investing through SIPs, they are really investing more for the medium to long term. They are actually allocating more to equity than they have traditionally done.
Right.
And these flows we find a lot more sticky as well.
Right. And it is quite extraordinary, right? So $1.9 billion approximately to, so annualized is 24 billion.
Yes.
And that is approximately equal to what you're expecting all foreign investors to bring in into the country.
Yes.
And historically, this number would have been very skewed, I presume.
Yes. And I think what it means is that this is a number that will grow and continue. So it's not a volatile number.
Yep.
Right. When people make lump sum investment, they put money when they believe, okay, next 3 months, 6 months outlook is good, or last 6 months return has been good. And when there's a bad patch in the market, they will kind of take the money out. I think with really the predominance of SIPs, I believe mis-selling of mutual funds in the industry has come down.
Right.
I think the regulator has done a great service by moving all distributor commissions to a trail model. Right? Because no one is just interested in selling the fund. They want the AUM of their investors to grow. Right. And so they encourage them to do SIP. They invest over the period of time. So depending on whether the market is at a high or a low, it really does not impact return. Because typically the challenge for retail investors is that people get attracted to the stock market when really the returns have been superlative, and that's not necessarily from an IRR point of view the best time to invest in the market.
Absolutely.
Right?
Absolutely.
But if you stagger your investment over the period of time, the entry point becomes less relevant.